Peterson from Heartland Farm Partners is our marketing analyst this week. Wednesday's momentum had ended when we talked with Jeff Thursday morning. Weather conditions for the current wheat crop remain poor, especially in Nebraska. Corn continues to face tight supplies, and in beans, the beginning of a South American harvest has some wondering if there's more upside or downside here in the U.S.
You know, we're kind of at a point, and that's what the question that customers are asking us every day. We believe we have a little bit more upside, and we would go higher as long as we can see continued dry conditions in South America. But once that forecast changes, we really believe that we have the potential to see a pullback.
The conditions there are close to ideal now, yes?
Yeah, they've had, it's mixed conditions.
Right.
They've got wet conditions in the north that's actually keeping some of their soybeans from getting to the market.
And then the south is much better.
Yeah, and the south is much better. But the thing you run into, though, is as you move into Argentina, they're actually to a point in here where they're dry, and that's actually almost to the point where it's affecting yield. And if it does continue and does affect the yield some more, then that's what it would take to give us a higher move from here in beans.
The ships are coming in there, getting ready to harvest some of that crop. How open is the window now? That window we've been talking about for so many months, the window of South American beans hitting that market, how close is it?
We're right there. There's actually a few ships being loaded already. We've got a big backup down there, though. There's a lot of ships backed up. There's a lot of concern about shipments in first half February, and as a result, China has been rumored to pick up a few cargoes of beans off the PNW actually the last couple of days because they're concerned they may not get the beans out of Brazil in time.
So you see that there is maybe a little bit of growth in beans. That being said, are you recommending locking in any sort of protection below it?
Sure. On the old crop, we are. We are really considering very closely right in here making some additional sales. I think the thing we have to be prepared for is that if we're of the camp that the price is going to go higher, we're in a weather market, and we have to see weather conditions in South America stay dry in Argentina and southern Brazil.
Where are you locking in protection at?
Yeah,
range?
Yeah, we'd like it up in this, say, $14.60 to probably, $15 level. It's a wide window, but anywhere in that range, I think, is an area where some sales can be made on the old crop.
Recommendations for 2013 crop?
Yeah, we're watching that very close. We made our last round of sales above $13 on the futures. Not necessarily using the futures, you could use cash if you wanted to, but if you haven't made any bean sales in here, we're in and around the $13.30 area, I'd recommend making some sales here also.
As you look at corn, I mean, the variations are quite differing. Best case scenario weather-wise, you produce a record crop far and away. Worst case scenario brings you what?
Worst case scenario brings us rationing that's needed, and actually we could take prices higher than we went last year. And what would have to happen to have that? We'd have to have the type of conditions that we had last year in the U.S. this year.
At this point, is that basically what you're betting on? You're betting between weather and rationing?
Yeah, we're betting right now. We're watching the weather very close. We're really the opinion on this old crop, though, that we don't think there has to be a lot more rationing done, though. We really think that we're on pace to kind of hit those numbers. And a matter of fact, we're kind of the thought process that the 602 carryout that was talked about in the last report, we may actually start creeping that number a little higher there. We are worried about some of the demand sectors. We are a little worried about ethanol, and we also are a little bit worried about, what is the feed demand going forward.
Let's step back just a second. I want to step back to beans because you had mentioned something when we talked earlier about the year-over-year difference we're seeing in beans. How does it compare 2012 to where we are in 2013?
Yeah, that's something we always like to look back on. So if we roll back time and if we're in a crop report in January of last year, we have to realize soybeans were at $11.58 back then a year ago. They did peak out at the end of April at $15.08. But in order for that to do that, we had to see the South American crop drop about 17 million metric tons. That was a big drop. Now we compare that to this year, and actually when we look at our stocks to use numbers, we're very comparable right now to where we were in April last year. So I think this bean market's pretty fairly priced right now.
Let's move ahead then to 2013 corn. It's below $6 a little bit. Where are you maybe thinking of pulling a trigger at?
We're wanting to sell in the $6 area. We already do have 20% of the crop sold, but our next level at which we're looking to advance is at the $6 level, and we think we have a good shot at getting that.
I'd like to ask you about wheat because conditions aren't good. The latest report coming out this week from NASS, 8% good in Nebraska, 0% excellent. Where do you see that market going?
I think we still have some more upside on the wheat side. It's a delicate one that we have to watch because it's balanced back to get beans, but I do think we have some more upside there yet.
If there's a pullback in wheat, what does that mean?
If we have a pullback in wheat, really what it means then is that maybe we aren't as competitive out in the world market as we thought, but I don't think we're going to see much of that.